Good evening. Ira Epstein with your Spider ETF wrap-up. And this wrap-up is for Wednesday, and we're at the 9th of February, 2022, just getting on to 7 p.m. Central Time. Now, tomorrow, folks, we're going to have the live webinar again. It's going to be a fun day because we have the CPI report coming out in the morning. And when that comes out, you're going to get your action. It'll set the day. And then at 12:15 p.m. Central Time, I'll open the chat room. I started talking and doing my whole magic at 12:30, and I end 20 minutes later at 12:50. A number of you have sent me nicely some ideas. A lot of you gave me charts that you wanted me to cover instead of IBM that I put up, but other ones. I'm going to cover them in the chat room tomorrow. So write me what you need. As you're watching me on YouTube, just use that. It works great. I read that. I take what you've got. But the questions, when you sign up for the chat room, in order to do it, if you didn't get my invite again, just take your cursor and move it up here. You'll see an icon. When you get your response email that you get password and user ID, my email address is in that. Write me what you want me to cover. Give me a chance in the morning to put that all together so we fly through the chat room. Should be a very interesting one. Hope to see you there. All right. So it's the CPI day, and we're looking anywhere between, on a year-over-year basis, 7 to 7.6% seems to be the estimates I'm seeing. Most numbers falling in the 7.2 area, something like that. Both month over month coming in about 0.4 greater, year-over-year about 0.5 greater, but it's back and forth. I'm giving you the approximates as to what they're looking for. And core CPI, probably close to 5.9%. What is it all going to mean? The market's had a heck of a rally. I was showing, if you were watching my financial markets for the futures, I brought up some Fibonacci numbers on the S&P, and I wanted to show where the market's at on this bounce, because it feels like to most traders, we're just going to keep going and we're back into the same world we were before the break in January. And there's nothing further from the truth. You're not quite there. It's been a wonderful bounce, and on a Fibonacci count, you've gotten up to where you have to be. That doesn't mean you can't go higher, but you're getting a little old in the tooth because you're reaching 50 to 62% retracement levels, something to watch. As I said, I brought up IBM, and only going to keep it until next Monday. We'll finish it up through Monday, and Tuesday I'll be asking you, in fact, now, what other markets you want me to cover, and you can let me know, and I'm going to rotate them each week. So we're overbought, no trend. You're caught between the upper Bollinger Band and the 18-day average of closes, and the market's trying to rebuild. You know, the story of IBM is a company reinventing itself, seems to be doing okay with it. We're certainly at the top part of where we've been in a long period of time. So overall, if I looked at a weekly chart, I'm sure it's in a bull trend. When you take a look at the daily action right through here, all right, that doesn't look too bad. And when we start building on it, higher lows and higher highs, that's pretty darn good. That's bullish. The market's over the 18-day average of closes. That's bullish, and you don't have an exact bullish setup. You got the 200-day average in gray over the 100. A real bullish setup, you'd have the 18, then the 100, then the 200. But it's still friendly until you take out, and unless you take out lows of yesterday, and that low was 135.78, so 135.77, the gates, the puncture in the balloon, right? Where are we going? Well, if you keep doing this, I think that you're a candidate for the upper Bollinger Band, 139.96, if you can keep going. You've been there once, you've backed off. That's the problem. You hit it already, and in momentum, what are we doing? Now, let me give you something else. Both numbers today are over 80. Both numbers yesterday were over 80. Both numbers the day before were over 80 and the day before. So what do we have here in the way of a market? You know what we call that, don't you? An embedded reading. What does it mean to me? It means that on breaks, I'm looking for the pros to buy. There's a caveat. You don't want to first take out today's high and then be buying the break. You want to buy the day that the break comes in first. There's a very certain moving average I use for that, and that's where I think the pros will buy, and they'll bail on their whole long position. That's what I teach, at least. On any reading under 79, you get to see that in the last 2 minutes of trade. Just turn on your charts. Got a reading 78, 76, whatever it is, you want to be gone. And if it's not lost, you're still looking for 139.96 again. In Apple's done well. You know, this is a new high for this leg to the upside since the earnings came out back here. So I wanted it to consolidate more or embed. Either one I can live with. You got both numbers over 80 today, so that's good, and the day before. It can embed on tomorrow's close. Funny, it's going to have you wait to see what the CPI number looks like. On XLF, today was a profit-taking day. So long, thank you. If you took my enhanced Bollinger Band course, why? What number did you hit for the first time? Game over. That's what you do, you move. Disney, stellar earnings after the end of the day, firing on all cylinders. I was looking, the park attendance going up, prices going up with it, streaming service doing well. They were up, last I looked, and I'm doing this at 7, they were up nearly 9% when I was looking at the market, so that was pretty good. Getting overbought, should the market reach 153.40, well, that would tell me at least, hey, that's where the pros are going to take money off the table. And I know you're going to say, Ira, it's going to keep going. Won't matter. That's what I think the pros will do. XLI, momentum up, trend up with today's close. This is the first close we've had over the 18-day average of closes. So everything's looking good, but where do you come in? I don't like the idea of coming in there and having too big of a risk going into the first CPI report. So I think tomorrow is going to be a day that we all take a look. And the neat thing is when I put out the morning subscriber video, and I start recording at 9, that video. By the time it gets out, it's about 30, 40 minutes later because it takes about 20 minutes to record it, 20 minutes for it to render so that it plays clear on the websites. And we've tried everything to get the 20-minute rendering time. We're using big outside services. There's just no way to get that done in the typical service. If you know of one, let us know. Write me. But a 20-minute video typically takes 20 minutes to render. But to make a long story short on what this is all going to be about, why step in there? And since I'm going to have the ability in that morning video to have already seen the CPI number, I'll give you everything I see at that point. Should be a lot of fun. XSD. All right. I have been friendly recently. You closed yesterday over the 18-day average closes. Come on, give it to me. There you go. Higher lows, higher highs. That's the go signal. You'd be wrong on the close or a move under 194.62. Multiple target of the upper Bollinger Band 100-day average. Still very much in play at those two. But beware, you're overbought now. You don't want to overstay your hands. You want to be able to grab something off the table if it pulls back and has to consolidate. You're still not there in the home builders, and I get it. Home builders, if you were looking today at the MBA mortgage numbers that came out, all the categories got hit hard. People, they got scared. They're not refinancing. They're not putting out new mortgages or anything. Admit it, it was a week ago number, and if anything, the numbers, you did what last week? Well, since then, you've stabilized. You've been trading between 196 and roughly 1.9 in the 10-year note, which sets a lot of these rates as to what's going on. Just be cautious. There's a lot of resistance above the market still. In XLE, no trend, but you're embedded. Now, the futures have lost the embedded reading across the board. So I think this market is prime time that if it takes out 67.80, that you're headed back to 66.17. If the futures stay down. So I told traders today, I think the pros are going short for a fast in and out trade in it. Watch, I'll be like that Swiss cheese guys I talk about. But, I pay attention to my own work. In gold, higher lows, higher highs, still bullish. The inflation themes here. A market that's going to be looking at those CPI numbers has to be gold. There's your inflation story. Are we going to see U.S. interest rates climb again? If they do, what does that do for the dollar? What's made gold go up recently is the flip-flop. The idea that inflation's here, that the Fed's going to raise rates. Now think of what I'm saying. Then when they raise the rates as many times as the market's building in, you're going to slow down the U.S. economy. Dollar's been falling. You're rallying because of that. If you get a weaker CPI number, that could reverse this and hit it. Just giving you what the thinking of the market has been and what's going on. In GDX, you went through this 100-day average as though it didn't exist. You're not even stalling there. You're trying to pull back tonight. We'll see. But if it can clear today's high, you got pretty clear sailing till up there. So I'll be watching that with a lot of interest. Mining stocks, I love them. Still one of my favorite areas for 2022. I just think I'm talking the commodity materials are going through the roof. I think the world economies are coming back. This idea that we don't have to wear masks in these other parts, in Europe, in the United States, very important. I realize third world countries still have their problems. They don't have the vaccine, but the rest of us that are in richer countries, we're doing a lot better. Hong Kong, I don't know if you watched what happened. They're shutting it down again because during the Lunar New Year, people traveled. Now they're all getting the diseases again. I mean, this was a given what would happen with all that type of travel. But in any case, you're at a zone where I think the pros are going to be taking some money off the table, looking for pullbacks to come in. COPX, need I say it? How long have I been telling you? I love copper. I think copper is a $5 item. That's where I think we're headed. TLT, well, you've moved to the right-hand side of the lower Bollinger Band. That's not a trend change. It's just a market that's not as extreme, getting oversold, but will it embed? That's going to be the big question. If it does, this is going even lower. But you're only at the beginning, and you've got the CPI number. I think professional money is out of this market, waiting for this report to cut out of its way. And in the euro, if you get under 105.92, be careful. You could be going back into the 18-day average. You are overbought, and your resistance is the 18-day average. So remember for tomorrow, I'd love to see you in the chat room, the webinar, if you will. Just take your cursor, move it up here to the very top. You'll see the icon, fill out the form. You'll get the email, write me your questions, and I'll do my best to get everything done for you. I'll see you all tomorrow at 12:30 p.m. for sure. Take care.